Good afternoon, and welcome again, ladies and gentlemen, to the Department of Inland Revenue's VAT Education Month. This will be the continuation of Module 1 that we started on Wednesday. So for those that may just be joining us for the first time, the entire month of April is dedicated to VAT education. And for this entire month, we are going to be going through the process of going through about 7 to 8 different modules that deal with different aspects of VAT and all of its regards. This first module is just really an introduction, so we'll be touching a little bit briefly over all of the different things that we will be touching on. Today we'll just do a brief recap of some of the things that we talked about on Wednesday, and then we'll talk about a few more items that we did not get a chance to touch on Wednesday. It's just a quick reminder to person. So with every module, the modules will usually take probably about 1 or 2 days because we're not trying to rush through the material. We want to make sure we thoroughly go through every aspect. If you have questions and you're not actually in the room, because we have persons in the room as well as persons on the YouTube channel, we ask you to please drop your questions on the YouTube channel, and even if we cannot answer right away, we'll make sure to get back to you with any answers and any queries. For everyone that participates inside of the training, at the end of the training, you will get a certificate once you have completed all of the quizzes that will come after each module is completed. So if the module takes about 2 days, 3 days the most for any module, once we finish with the module, you'll be sent a link with all of the presentations, the PDFs, and the quizzes. If you choose not to participate in the quizzes, that is fine. But if you do so, in order for you to get your certificate, you have to complete all of the quizzes with at least a 70% and higher. The important thing is we want to make sure that we're not just doing the information, but you're getting it, it's clear, and you understand what we're doing with the information at the end of the day. Because we want to have a compliant and voluntarily compliant community at the end of the day, but we also want to make sure we demystify any aspect when it comes to dealing with VAT and the information for VAT. So just to start the day off, the way we like to start every session, just want to start with a quick word of prayer. Father God, we thank you for your grace and mercy. We thank you for those that are here and those that are tuning in, oh God. We pray as this information goes over the airways, over the internet, oh God, that you bless, guide it, keep it, help it to illuminate and educate each and every person that is tuning in and listening in, oh God. Guide us in what we say and help everything to be done in decency and order. In Jesus' name we pray. Amen. So, just starting off with a quick recap of yesterday, I just want to remind persons a little bit about how VAT withholding. What we encourage persons to do as we send out the PDFs as well, to please make sure at the end of the day you take the time to go through. So if you do have questions, we invite persons to make sure that for today's training objectives that are continuing from Wednesday, we're going through the process of making sure we define value-added tax, differentiate between VAT and sales tax, summarize the history and evolution of VAT, even in the Bahamas, identify the benefits, demonstrate knowledge of VAT-related business operations, and apply VAT concepts to real-life business scenarios. We encourage persons to once again to make and we find out in our system that they are not registered for VAT. First of all, it's an offense for them. It's an offense for them. It may actually end up being an offense for you because you didn't verify that the person was a VAT registrant, and then you will additionally not be able to actually apply for your input VAT. So we're asking everyone to be their brothers, keep us in this at the end of the day, because we want you who are honest business persons and compliant to be treated fairly, as well as the consumers at the end of the day. I get a look inside the room, so I have to watch what I say with that again. I ain't kidding. So let's go on. How VAT works. Move to the next slide for me. Okay. So Okay, so say for example, the manufacturer sells to the wholesaler for $100. He then will add on $10 for his VAT. I think it's the next slide you need to go to. The wholesaler then sells to the retailer, who then takes the charge that he received and adds on his cost, and then he of course charges $20 VAT. The retailer then sells to the customer for $300, and then they charge them an additional 10% VAT on that. So at the end of the day, the customer is the one who actually pays for all of the costs for the VAT, because it keeps getting included with the price by the time it reaches them. And all of the manufacturers and wholesalers, as long as they are registered, and I cannot say this and stress this enough, as long as they are registered VAT businesses, then they will be able to claim any inputs from any purchases that they made at the end of the day that will deduct out of their output. And we'll show the formula a little later of how you actually do the VAT calculation with your output VAT and your input VAT.
Common than you might think. They both generate revenue, they can be really complicated, and some are just blockbusters. Like our old friend, value-added tax, also known as VAT, or goods and services tax. So how do value-added taxes work? Let me explain. With popcorn, obviously. The corn starts out in a field with a farmer growing his crop. He sells it to a company that takes that corn and puts it in fancy packaging. Then, that company sells the packaged products to the cinema, and ultimately to the customer. Now, let's rewind and watch that again. And this time, let's assume that the country where all this is taking place has a 10% value-added tax. Here's how that works. Our farmer sells his popcorn for $10, but the packaging company buying it, they actually pay him $11. So why the extra dollar? Because that's the 10% VAT. That same thing happens again when the company sells the packaged popcorn to the cinema for a profit. So now the price is $15. But with the added 10% VAT, the cinema actually pays $16.50. And then, finally, the cinema sells the popcorn to the customer for $20. And that customer, once the VAT has been added, is paying $22. So far, so good. But here's an added ingredient that advocates of VAT say makes the system really work. And that's tax credit for businesses. A tax credit is just an amount that a business can subtract from the VAT it owes the government. VAT makes it so that while everyone on the supply chain pays their 10% in tax, they also get tax credits for whatever's already been paid by those selling to them. So across the whole process, it's a flat rate of 10%. In the end, only the consumers actually pay the VAT since they aren't granted a credit. Oh, great, it's starting. Let's go. So the thing is, let's take this somewhere else. You may have noticed how popular that handsome actor was. Real star power. Well, that's kind of like value-added taxes. They're one of the biggest sources of tax revenue in the world. More than 160 countries have a VAT. Why? Well, there's less tax evasion. VATs are a built-in cost. So each business isn't just collecting the tax themselves. So they're motivated to report their taxes honestly to get those tax credits. And it's important that they do. While VAT rates are different and higher burden. But a lot of those concerns can be answered by using the money from VAT to help the most vulnerable. Some argue that reducing the VAT rate on basic food could be a solution, but it ends up benefiting those who don't need it and makes VAT collection more complex. That can be avoided by making sure that there's a single universal VAT rate and using progressive income taxes and cash transfers to support poorer households. And that's VAT. Cut. Feels like we could have gone for more of a Hollywood ending, right? That's VAT.
So let's talk a little bit about why VAT in the Bahamas. So VAT was introduced in July 1st of 2015 at a 7.5% rate. It was increased to 12% in 2018 and then reduced to 10% in 2022. It replaced inefficient taxes like the hotel occupancy tax and broadened the tax base. It's designed to stabilize government revenue and reduce dependence on import duties. A lot of this information we did a little bit more in depth yesterday, so this is just a quick recap of some of the things that we have gone over, just for those who may just be joining us for the first time today. So its importance and benefits. VAT provides more than 50% of total tax revenue in the Bahamas as of 2024-2025. It funds vital services like healthcare, education, roads, government programs, salaries, and a number of other government things. In addition to that, it encourages transparency and record keeping by businesses. Importance and benefits. There you go. So it also allows registered businesses to claim input tax credits. So let me just go over it once again for those online. It provides more than 50% of our total tax revenue. It funds vital services like healthcare, education, and I know I said the joke yesterday, and I'll keep saying it until I get it sorted. I get 1 or 2 potholes I need fixed too, because I tired dropping inside these holes, and my tires go one way and the car will go the next. It encourages transparency and record keeping by businesses, and it allows registered businesses to claim input tax credits. So, how does VAT affect businesses? Registered businesses must, next slide, registered businesses must charge VAT on taxable sales, which means as long as you are a VAT registered business, you must charge VAT. You cannot be registered for VAT and don't charge VAT. You have to actually charge VAT on all of your sales. And that also means whenever you pay to a business that is a VAT registrant, then you can claim any of your expenses as an input VAT that deducts from your output VAT that would be returned to the government. File returns monthly or quarterly and keep records for 5 years. It used to be 7, but now it's 5 years. And VAT registration is mandatory if your turnover exceeds $100,000 a year. So, our VAT compliance tools. Businesses must file and pay through our OTAS system, the online tax administration system, and VAT returns are due 21 days after the end of each tax period. Penalties apply for late filing or underreporting. Late filing greater of $100 or 2% of the tax due, and understated VAT, additional 10% penalty plus interest. So, some key definitions. Our standard rated supplies, which is taxed at 10%. I separated it because now we have an additional new standard rate, which is the 5% for non-prepared items. And then we have our zero rated supplies, which is taxable by 0%, and exempt supplies that are not taxed and no input VAT claim. And then we have our taxpayer identification number. So I would say as we go through the different modules, we're going to get a little bit deeper into explaining these a little bit more, looking at some zero rated items and supplies, exempt supplies, and explaining that a little bit better for persons to be able to have a better understanding and grasp of how all of these work together. Now, what is important to note is now with the new tax rate, when you actually file for VAT, there will be new lines that will be added actually to the tax form where you have to actually put your 5% input and your 5% output, and as well as your 10% output and your 10% input. Now, this is very important when you're actually dealing with other businesses that charge you VAT, because this is why you need to make sure the records you take from them is complete and in order, because then when you have to file, your filing will be off if you don't get the correct information from them. So, what is VAT charged on? Okay, so I said this yesterday, and I'm going to have to say it again. And this is something that I'm going to have to keep beating on again and again because I need persons to understand this. Let me see if my persons in the room remember exactly yesterday. I asked the question. When we asked the question, what do we actually charge VAT on?
TIN number.
Thank you so much. So, what VAT is actually charged on is your TIN. It isn't actually your business license, but it is actually the TIN number. So let me just explain this a little bit. With VAT, every particular business license you have gives you your TIN number. If you are a sole proprietor at the end of the day, that means every business that you have as a sole proprietor would fall under that one TIN. Say, for example, you had 10 different businesses and you were a sole proprietor. All of those 10 businesses would fall under that TIN. So when you actually pay VAT, you're paying VAT on that TIN. And the reason I'm explaining this, and I'm going over this again and again, is we have persons that sometimes have multiple businesses, but they say, well, this one business is only making $2,000. This other business is only making $20,000. This other business is only making $30,000. So they're looking at each of their businesses as individual and separate entities. But the problem is, you don't look at paying VAT on the individual business, you pay VAT on the TIN. So if Granny have Granny Shoe Shake, Knee Shake, Hair Shake, and every other shake you can think of as each different businesses, and collectively they add up to $100,000, then Granny is required mandatorily to voluntarily register for VAT and pay VAT for each of those businesses. So imagine you had 10 businesses, and collectively 9 of those businesses were $99,999.99, and one business made a penny or a dollar that took you over the $100,000, then that means all of those different businesses that you actually have to be registered for VAT, and they also have to charge for VAT. In addition to that, say you and 2 persons decide that you're all going to get together for a partnership. That's a separate TIN, and that's a separate entity. So the first business that you have as a TIN, that's over the $100,000 you would pay VAT on. And if the second business, they keep saying this because a lot of times persons get it mixed up. Heck, I was mixed up at one point. Now I'm blessed and clarified and salvated with the VAT education. Sorry, having fun with this today. Okay, so just going over some of the things I said. Firstly, in the Bahamas, VAT is charged based on the taxable activity linked to the TIN. The TIN is assigned to the business entity or individuals based on the type of operation. And VAT registration is mandatory for entities making over $100,000 a year in taxable revenue. However, you can also voluntarily register for VAT even if you're not over the $100,000. And what we encourage persons to also do is, if you look at the third quarter like you know you're approaching to be over VAT, to just start the process of registering, so when you do go over, you've already done it. Because once you go over, you are required then to actually register for VAT right away. So let's look at our first business, a sole proprietorship. Allen Eats Takeaway. They're making over $150,000 and they're registered for VAT. So then any of their sales, they can now charge 10% on the VAT, and at the same time they can turn around and actually when they have to make purchases, they could also receive their input from VAT. If you look at the example there, their sales at a meal are $100 and they charge at 10%, and so their total charge is $110. Please let me know if I'm going too fast at any point, whether online or of the persons inside the room. So let's look at our second one. So the TIN is tied to the individual owner's name, but the VAT is charged based on the business activity. So when you have an invoice, the invoice must carry both the TIN and the business name. This is why it's important to make sure at the end of the day that any receipts that you get reflect the fact that it is a TIN and the business name activity, so that it can be verified that this person is VAT registered or not. So let's look at our partnership. Same thing. John Roll and Michelle Taylor, their annual revenue is over $200,000 and they're registered for VAT, so they can also charge 10%. Now here's something to also keep in mind. With a partnership, the TIN belongs to the partnership, not the individuals. So that means the VAT filings and the returns are filed using that TIN, not the individuals. Each partner is responsible cooperatively or jointly for the compliance. That don't mean at the end of the day you're in a partnership with somebody and you feel like they're not carrying their weight, that the government only coming looking for them. No, they're coming looking for the partners together. It's the same thing with a limited company at the end of the day. All of the board registrants, the directors and above, are responsible for the finances of that company. So jointly, you are held responsible for what that business does. If you get mad at Auntie Sue and Auntie Sue ain't pulling her weight, at the end of the day, they're going to come looking for you, Auntie Sue, and Auntie Jane all at the same time. So that's just something to keep in mind when it comes to the partnerships or limited companies. Now, this last one is Olivia Sands Jewels Limited. Now, Olivia sells handmade jewelry sold, but her company is a limited company. Now, the thing to keep in mind, so let's just demystify it, just because you're a limited company does not mean you automatically have to register for VAT. Because sometimes persons believe that the minute I have become a limited company, I have to also be registered for VAT. That is not the case, because the VAT is depending on your actual gross turnover and not actually the type of business it actually is. So that is the thing to also keep in mind. However, if she does decide, even though she only makes $25,000, that she wants to be registered for VAT, she can do so, and that her VAT status is not registered, so she also cannot charge VAT. And just repeating, because Olivia's company is not registered, she cannot charge VAT or issue VAT invoices. If her sales exceed 100K, she must register, and she cannot claim input VAT on business expenses. So I just want to remind persons again, because of the different material that we actually have, some of the material may be an hour, some may be a little longer, based on the topic and how in-depth the topics have to be. Today's session may only be probably about 30, maybe 40 minutes, because at the same time, we're just recapping from the first module and we're just doing an introductory. When we get to the session on Mondays, where we go in, that most likely is going to end up being a 2.5-hour session. And since this is a short session, we're just going to skip through from the break, unless my people in the room need a break. All good? Okay. So let's talk about VAT invoice. So understanding how to price goods and services correctly under VAT is crucial for compliance and transparency. The VAT inclusive pricing, the displayed price includes the VAT. Common in retail settings where prices on shelves and menus show the total amount the customer pays, businesses must clearly indicate that prices are VAT inclusive. Then we also have exclusive pricing. This would be in the instance where the displayed price excludes VAT, which is added at the point of sale, often used in business-to-business transactions where the purchaser can reclaim VAT. Invoices should clearly state that VAT amount separately. I will say this again and remind persons, as long as you're doing business with anyone and they are someone who says that they are registered for VAT, you also want to make sure for your business sake, especially if you're registered in VAT, that the invoices that you receive from them has all of the information on it at the end of the day, that it enables them to make sure that you can claim your input VAT. So for example, the retailer prices a product at $100. This is VAT inclusive. You only see the $100, but then when you calculate it, the amount already includes the VAT. So the actual price is approximately $90.91, with $9.09 being VAT, assuming a 10% VAT rate. I would say definitely now where we have for certain food stores and items where they have both the 5% and 10%, you want to make sure that they are properly outlining in their receipt the different prices and the different VAT rates, so you can tell what you're being charged for at the 5% versus what you're being charged for at the 10%. And then for our VAT exclusive, a wholesaler lists a product for $100. At sale, the VAT is added, making the total $110. It's important to clearly communicate pricing structures to customers to maintain transparency and trust. Misrepresentation of pricing can lead to compliance issues and penalties. So, what must a VAT invoice include? Firstly, it should say the VAT invoice prominently displayed, the supplier's name, the address, the TIN or the tax identification number, the customer's name and address, if they're registered for VAT. And this is in the instance that you're claiming inputs. You want to make sure that the receipt that you receive also shows your name as a business and your TIN, so that when you claim your inputs, you can actually see it. A unique invoice number and date, description of the goods or services supplied, and the quantity in unit of price of goods or services, and the total amount excluding VAT, the VAT rate applied, the total VAT amount, and the total VAT including VAT. So let's just look at a sample invoice. Now, just take in mind as we go through this, you're going to have invoices that are going to look completely different in their setup and their formats. But especially when you're dealing with a business and you yourself are a business owner that applies for VAT and you're registered for VAT, you want to make sure that you have all of these items, including your own name with your own VAT TIN registered on the invoice. That makes it easier for you when you have to file. So first we have the supplier's name. Then we have their tax identification number, their invoice, and a unique invoice number, the date that the transaction was actually done. And for these first set of information, these are all important because if you have inquiries or audits, you need to be able to follow back up and say what is going on with the invoices. Then, of course, the customer name if it's applicable. I made the joke earlier, Rupert Roberts ain't gonna put all our name on his receipts at the end of the day. The description of the goods or services that you receive. The receipt should always show a unit of the goods or service excluding the VAT. So whenever the VAT is calculated, you'll be able to tell whether you're being charged 10, 5, 12, or 7.5. So you know for a fact that you're being charged the correct rate that you should be receiving. The VAT rate, the actual amount for VAT so that you can easily calculate it. And because we ain't got to be dealing with no pennies, it should be easy to throw 10% on most things. The total VAT including the VAT, the total amount including the VAT. So these are mainly the basic things that you want to look for when you're looking at a receipt for someone that charges you VAT. I cannot say this again enough. And I implore you, for those that are in the room, those that are listening in, if you go into a business and they are charging you VAT, first thing is, if you don't see a VAT certificate, that is already a compliance issue. And if you decide to be polite and ask them for it, for the fact that it should already be displayed and they don't have it, then they can't charge you VAT. And please, call us as well and let us know. Because they shouldn't be charging you VAT. It's illegal for them to do so. Because at the end of the day, like I said, from a business to another business, if I am now putting in for my input VAT and find out that you're not even registered at the end of the day, that means I'm at a loss. So let's look a little bit at our VAT audits. We talked about this on Wednesday. So timely and accurate filing of VAT returns is mandatory to avoid penalties and interest charges. Key points: the filing frequency, the monthly filings required for businesses with annual tax sales exceeding 5 million, and the quarterly filings permitted with businesses with annual tax sales below 5 million, though they may actually opt for monthly filings if preferred. Submission deadlines. VAT returns must be filed online within 21 days following the end of each tax period, and payments are due at the same time as the return submission. We have large taxpayers or large taxpayer unit which you can be invited to, and only by invitation. Those are the only ones that would file on the 14th instead of the 21 days. And of course, payment methods could be made through our commercial banks or online via the tax administration portal. I want to remind persons again, especially when you're making your payments, please ensure that the bank account that you are paying to, first of all, is the correct bank account, because the government has over 60-something different bank accounts. And here alone at the department, I'm sure we have over 10 different accounts for various things, whether it's VAT stamp, real property tax, first home. So you want to make sure when you're filing, first of all, you have the correct information for the bank account if you're paying through the bank. And secondly, you want to make sure at the end of the day, don't go into the bank the same day that you know your payment due and put it on and think you're going to hit your account. It ain't going to reach us. And when it reaches us, it could come with a late fee. And when it comes with a late fee and you come back to us, we gonna have to tell you, I'm sorry. Because at the end of the day, the only way to make sure your payment reaches, especially if you know the bank takes 2 to 3 days for it to hit our account, is it has to be done before that time. Because when you make your payment into the bank, we can only verify that when it hits our account. So we encourage persons to make sure when you go into the bank, make sure first you have the correct banking information. Secondly, do it early and don't do it last minute. And thirdly, keep your payment receipts. Because we had one of our clients that was in here that said herself, she paid the right information, she had the right bank account, but the bank itself paid it to the wrong account. And only because she had our documentation, she was able to get that to go to the right account. So we're encouraging you, the public, to make sure, pay attention to the details even when you're making your payments. We want to make sure we receive your payments in a timely manner. We don't want you to get late fees at the end of the day, so we want you to do it early enough. And if you have questions, this is what we're here for, to make any inquiries, to make sure give you the right information as you go through. So, encouraging as you go through and you're preparing your audits, regular audits, that's the wrong slide, too far ahead. Preparing for audits. Ensure compliance and accuracy in VAT reporting. Being prepared can facilitate a smoother audit process. Audit triggers would be discrepancies between reported figures and actual transactions, and consistent late filings or payments. Random selection by tax authorities as part of routine compliance checks. Preparation checks ensure all records are complete, accurate, and up to date, and we encourage you to reconcile your VAT returns with your financial statements regularly. Encourage you to train staff on VAT compliance and record-keeping procedures, and consult with a tax professional to conduct internal reviews and identify potential issues before they occur. So let's talk a little bit about any questions so far, though. I know I'm going through a lot of information quick.
I'm writing, so I don't want to take up too much time, and when you get to the end, I would ask. But if you want me to ask now, I can.
You can go ahead. Hold on one sec. Let me see. You turned it on, Ms. Hunt? Just click it once.
Okay, so my first question is from the video. As consumers purchases items, that last person that reaches the end, do they get tax return on everything filed along the way, or only the last product that they purchased, the $16 product?
So let's look at it like this. Are you a VAT registrant when you
Yes.
purchase? If you're a VAT registrant, then you can claim the input from whatever VAT that you were charged on the purchase. You wouldn't go back to every business. It's just that whatever that last item was that you purchased, say for the person that got the $300, they were charged 30% VAT. So their input that they would be claiming on would be the $30 that they actually had to pay for the item that they actually purchased.
Okay, my second question is, if you are a voluntary or self-registered VAT registrant, let's just say you operate a small convenience store. I noticed that the receipt is very in-depth. Do you have to give each customer a receipt, or do you just record keep? Because if I'm charging VAT and somebody just come to me for a check, or they just spending a little bit of money, as a business owner, I don't want to use the resources to print a receipt just for one item. So do I have to have invoices for all of the items that I sell and charge VAT, or can I just keep it in whatever I use, QuickBooks or a ledger or whatever?
Well, here's the thing. How you operate your business is really up to you at the end of the day. But what we encourage persons is to the best of their ability to keep good record keeping. Because if at the end of the day, when you have to file for your VAT input, it's making sure that all of your records that you actually do are actually in order. If you're using, I would say, and we'll talk a little bit about what we're actually about to, the different type of accounting methods. If you're using an electronically based method, because there are a lot of different ways. You have QuickBooks, you have Invoice ASAP, you have Peach. There are a lot of different things that you can actually use at the end of the day. What you want to make sure of is however you send your receipts to your clients to make it easier for you and for them when it comes to the use of your resources. Some businesses may not give a client a physical receipt. They may send them an electronic receipt right there on the spot, which honestly, if you think about it, is really easy for them and you, but it also gives you an opportunity to build a database and a rapport with your clients. So that way, you're sending them an electronic receipt that still has all of the information you need. You're still compliant, and the customer themselves has a receipt and a record of the purchase they made. Otherwise than that, what you're doing is opening the door for yourself to have an inconsistency in your record keeping and your filing.
But I wouldn't need these to file for a return.
Well, let's put it like this. If you are actually registered, we do require you to make sure all of the receipts that you provide are actually accounted for. Because if you're missing receipts, you can't actually apply for your VAT input, and especially when you're putting in for your VAT output if you don't have records at the end of the day to keep account of it. So just to repeat real quick, the question was asked at the end of the day, do I have to keep all of my receipts and my records, even if I have a small business, because it may actually at the end of the day affect my resources? I would encourage persons, again, for both compliance reasons, to keep all of their records. Even if they're doing it electronically and they sending it to their clients, that will make it easier for their record keeping as well as their clients. Let's take an example, the lady we spoke about earlier about the banking aspect of it. If she didn't have a receipt to prove the fact that she did her transaction, she wouldn't even have been able to go back to the bank to say she made her payment and for them to correct it. If a client comes to your store and say they had an item and something was wrong with the item may have been damaged, the item may have been possibly outdated and you weren't aware of it at the time, and they brought it back to you. The only way that client can prove that at the end of the day is by the receipt you give them, whether it's a physical or an electronic receipt.
Okay, just two more short questions.
Okay.
You made a statement, so I had to ask, is there any way to recover if you paid VAT to someone who isn't registered, or would this become a civil suit? Because if you operate a large business and someone charge you, let's just say over a period of X amount of months, and you thinking, okay, I can get at least $5,000 to $6,000 in return, and when you go to file, you realize this person ain't registered. You said that just take a loss. As a business owner, no matter how small my business is, I have a problem just taking a loss. So is this something that has to become legal, civil?
That would be something that becomes legal and civil between you and the client, because even before you do business, you would have to do your due diligence.
Okay.
And the reason, so the question that was asked again for those that are actually online is, if at the end of the day I do business with somebody and find out that they're not registered for VAT, what do I do to reclaim my loss? In this instance, it would become a civil matter, but we encourage persons to do their due diligence before they do business with anyone, because we do have a listing on our website that lists to you all of the VAT registrants.
Okay.
So you have the opportunity, even before you do business, to go and check the website, and even if you needed to, you could always communicate to us just to verify, because it's always constantly being updated as new persons register, to make sure that the business you're doing business with or intend to do business with is actually a VAT register. So I would encourage persons to, one, check the website for constant updates when we actually do update the website with the listing of VAT registrant that is open for anyone to view. Two, if they're not sure, still communicate with us. Contact us, whether it's by email at taxinquiries@bahamas.gov.bs, call 225-7280, which is our contact numbers, as well as in the portal. We encourage persons to always message through the portal for somebody to actually be able to assist you, because at the end of the day, this is your business. You want to make sure that your business is protected, and we want to make sure that you're treated fairly with how you can do your compliance at the end of the day.
Last question. If I have items a business where I'm frequently importing items, can I file for tax return on the service that the shipping companies charge me?
If the shipping company, and this is a question, let me just repeat the question again. If I am a company that does a lot of importations at the end of the day, am I able to file VAT for the shipping company?
A VAT return for
VAT return
the
for the
yes, sir.
So if the shipping company at the end of the day is a VAT registrant, which means they are charging you VAT for what you're paying for, then yes, that is something that you can actually do a part of your input, but it has to be made sure, like the question was earlier, that you have all of your records in place so that you can actually file for that, because then you would also have to look at the customs aspect of things. Okay.
Okay, thank you.
You're very welcome. Okay, so let's talk a little bit about the accounting methods. So there are two accounting methods that we utilize when it comes to actually dealing with VAT. The first one is the invoice method and the accrual-based method, and the second one is the cash accounting method. A lot of small businesses most likely would probably end up using the cash accounting, which is basically your VAT is reported based on the actual cash received or paid at the time of transaction. So let's use, for example, what you said about the person who came into the store to purchase a chip. If you're on the cash basis, then basically whatever VAT you charge him for that item, that's what you would be reporting at that particular time. Versus the invoice-based method or accrual is when the invoice is actually issued or received, not when the payment occurs. So once your gross turnover is over 1 million, you must actually use the accrual method. So let's talk about it a little bit more. So with the cash-based method, again, is based on when the cash was received and actually paid. In the invoice-based method, is reported when the invoice is issued or received, not when payment occurs. So say, for example, you had a business that you issued an invoice inside November, but then you have to do your filing inside January, but you still haven't received the actual payment for that as yet. You still have to include that as a part of your VAT filing at the end of the day because you're utilizing the actual accrual method. Okay. So we have a question online. What happens if we purchase from another business some goods that should charge us 5%, but instead actually charge us 10%? Do we claim a credit of 5% or 10%? I would say in that first instance, that would be something that you would probably want to report to us and to keep the record of, so that when you do your filing or before, it can be verified the fact that you were charged incorrectly for the actual rate that you were charged at. In that instance, because of the fact that you may have found after the fact that you were charged the wrong rate, I would tell you to communicate with us before you do your VAT filing so we can give you the best advice on how to go about dealing with that. So, looking at our cash basis versus VAT accounting again, the output VAT is reported only when the customer pays. The input VAT is claimed only when the business pays the supplier. So if I come into your store today and I need to get me some nice candies, some nice chocolates, hopefully our coach ain't hearing this, Mia, because I could be in trouble later. At the end of the day, when you go to report your VAT, you will report it on the fact of what was purchased right there and then. And if you got to go and restock your store, you would actually put your VAT based on what you had to purchase when you had to repurchase your supplies. So say, example, you issue a $1,000 invoice in March. This is incorrect. Then when you actually go and you make your payment for your VAT invoice, it would actually include the March. The last example is a little incorrect. I do probably apologize about that. Okay, so your output VAT for your invoicing is due as soon. Sorry. Brandon, I see him spirit yesterday trying to take back over. Okay. Sorry about this. I don't know what it is trying to fight us from getting this information out, but we are determined to make sure the public and everybody gets it. Okay. So, I'll just explain it. So the output VAT at the end of the day, when you actually, as your business, make sure that like I said before, with the accrual basis, your output VAT, whatever your sales is and whenever you issue it, that's when you actually have to claim it inside of your VAT thing. I don't know why that's doing that. So if at the end of the day, your output is due inside, say you make your output inside November, like I said, and then you do your filing in January, you still have to include that output. However, your input can be claimed whenever the supplier actually makes the payment. So say, for example, the supplier paid $1,000 in March, you can report and pay the VAT for the invoice in March, and even if you're not paid until May by that supplier. All right, I'm gonna exit. All right, good. So let's look at our reporting methods. I don't know what spirit that was that tried to jump on this laptop just now, but I could rub some oil on this later. So our reporting methods. We have two types of reporting methods. Now with our standard reporting method, which I'll start with instead of the flat rate first, we now have two different rates. We have the 10%, we have the 5%, and we still have the 0 rated items. So when you actually go to file for your VAT, if you're using the standard reporting method, that means now you're either going to be putting in things for the 10% or you're going to be putting in things for the 5%. And if you do have items for the 0 rate, then of course you'll have to indicate that as well. But with the standard reporting rate, you can actually claim your output VAT and your input VAT. However, if you're using the flat rate scheme, and there's only qualifiers for businesses that are basically under 400,000, you will have a flat rate of 6.5%. that applies to your output only, which means that applies to your sales. You cannot claim input VAT with a flat rate of 6.5%. Now, the benefit of it is, at the end of the day, depending on the amount of sales you make, it may be more beneficial to you to use the 10% or the flat rate. But with the flat rate, what you have to keep in mind is it's going to be on your output and your sales. But in the instance of any purchases and stuff you make, you will not be able to claim anything from that in that instance. Is that clear enough? Or
No, can you give an example, please?
okay, say your nice store that you have at the end of the day. So the question is about the example. So say your nice store at the end of the day. You make $1,000 and you decide for the government that you're registered as a business that's only paying a VAT rate. So when you do your filing would be 6.5% on that $1,000. That would be what your actual VAT would be what that you would submit to the government. You, however, would not be able for any of your purchases, any of your supplies, be able to actually include that as a part of your standard input. Versus when you do your standard reporting, you would be still paying the regular 10%. So say for that same $1,000, you would say 10% of that, which would be $100, and say then at the end of the day, you spend $800 on your actual purchases. Then you know $80 out of that would actually be what your input VAT is. So your $100 would minus, your $80 would minus from your $100, and what you would pay to the government would be then the $20. Right. That's clear?
Yes.
Okay. What about persons online? Okay. So let's look at our VAT equation, what I just mentioned. So our output VAT would be our VAT collected on our sales minus our input VAT, which is VAT paid on our purchases, which would determine whether we are paying VAT to the government or at the same time we have a credit or a refund. A lot of small businesses, and this is why we also mentioned the fact at the end of the day about businesses below the 100,000 having the ability to actually register, because at the end of the day, you may actually end up having more purchases than actually output at the end of the day, which means you find yourself in a position of a refund and a credit at the end of the day. So there are benefits, even though you're not over the 100,000, to actually still register, but then you have to weigh for yourself which works better for you. Whether at the end of the day you want to have the flat rate of 6.5 if you see that you're under the 400,000 or the 10%, but that can only be determined by you and your business when you sit and actually do your calculations to see what works for you.
So with the flat rate, even though I'm paying 6.5, I'm charging 5 and 10?
Yes. So with the flat rate, even though, the question I was asked, even though for your filing, you're filing at a 6.5%, you're still charging at the 10 and 5%, which is why some businesses, when they're under the 400,000, opt to go with that, because they may find that they retain more of the revenue that's generated than that actually has to be paid. Now, let me just mention this as well. As we're looking at our monthly VAT readiness checklist, we want to remind persons, if you register for VAT, you are required to charge and pay VAT. The only way you can be unregistered for VAT is, first of all, if your business, you can show that the business is under $100,000, and that most likely has to be over a consistent basis of 2 years to show that you were not making the revenue for 2 years, and you have to write into us. You cannot just stop paying VAT or registering for VAT, because you will be charged penalties for that. So it's just keeping an open communication with the department to let us know where you're at and what's going on with your business. And if at some point in time, after you've seen that the business goes back up, then you can re-register. But you can't just because you have a bad year or a bad year or two decide, okay, I'm not paying VAT because I'm not making over 100,000. Once you're registered, you're registered. The only way for you to be deregistered is to actually to email and communicate that to us by writing, and for it to be approved for you to be deregistered. I saw a question.
Thank you, so this is the person who's...
Hold on one sec for me. Yes.
Okay, so I think you would have answered part of the question. You, from what I'm understanding, you're saying that if you register for VAT and there comes a period of time where you're not making, I guess, the 100 or 101,000 above that, you cannot say not pay it because you have already registered for that.
Yes.
So a person who has not registered for VAT, that within 2 years, is that like a deadline where you say, okay, you've been in business two years, we would assume you're making 100,000, if I'm understanding you correctly, or
Well-
you would allow the entrepreneur, the business person, to contact Inland Revenue to state their current position?
Well, take in consideration when you have to do for your business license renewal, you have to state what your actual gross turnover is. So there are checks and balances in the system to see if a person is reporting correctly what they're actually supposed to be reporting. And the reality of it is we know sometimes persons underreport, that's why there are penalties for that when we find out at the end of the day that you're underreporting and you're supposed to be reporting. Those are some of the things that we'll probably discuss as well when we talk about compliance and other aspects. But as long as you are a business that has, whether it's voluntarily or mandatorily being, things I want to say, because it's not something we're going to deal with today, we'll probably deal with it when we talk about the registration process, is to also encourage persons when they are registering for their business license for the first time to also be careful, because sometimes persons do accidentally, because of one reason or another, register for VAT. And then what they find out is when they go for their business license renewal, they have a filing fee that is charged to them because why? They didn't know that they registered for VAT. So that's why we're also going through this process for both processes, how you register when you're doing it from your business license side, and how even after you have your business license, you can still voluntarily go and request it, because we want persons to know how to try to avoid that mistake as well, because we wouldn't want to charge you for something that you did by accident, but you have to show proof that that was the case, because sometimes persons do that as well. Does that answer the question?
Yeah.
Okay. All right. So let's look at monthly VAT audit readiness, our checklist. All invoices, of course, should be issued numbered and saved. All supplier invoices reviewed for the VAT input, and all sales and purchases logged with dates. And in answer to your earlier question, I just want to add on to that. The reason we want you to make sure you're keeping your records is also for the sake of honesty and compliance, because then you don't want to be dropping off your output just to increase your input, and then you find out that you shaving off what your sales is just to increase your input so that you can get a refund or a claim, because then when that's found out, and records will find out one way or another, then you put yourself in a position where you're in a compliance issue at the end of the day. And there are penalties for those type of things.
They usually take to issue your refund after you apply.
That one I can't answer you right off the bat. Oh, the question was how long does it actually take at the end of the day to actually issue a refund? I will be honest, I cannot give that answer right away. I don't want to say when King Harry was a hatchet, because you know they may call me in for that. But realistically, I can't give that answer right away. So, key records to keep. Of course, again, for 5 years, we encourage you to keep copies of your VAT returns, your invoices issued and received. We also encourage your credit and your debit notes, and proof of your VAT payments, your bank confirmations, and OTAs receipt. Just like I had mentioned before, anything can happen. You want to make sure at the end of the day you have your records to verify and prove it. The filing schedule, again, is 21 days after the tax period ends, and file via our OTS portal, and confirm the email receipt of filing confirmation. So when you do file, you want to make sure you receive the email that shows and verifies that you did confirm, because when you file, you also have to make payment at the same time. If you see that you've gone through the process and filed and you haven't received an email, we encourage you to communicate to us, whether it's through the portal or some other means, instead of you accidentally going and actually making a double payment, because sometimes that happens to persons. So we encourage persons, if you know you've gone through the process of filing and you didn't receive the email confirmation, communicate with us just to make sure you don't accidentally go and file twice. And then of course we encourage you, and I said it before, so the thing with your receipts is receipts fade very quickly for printed receipts, so we encourage persons, whether they use an electronic system at the end of the day to keep records of how they do their business, or digitize your receipts. When you're finished with your receipts, make a process of where at the end of the day you're actually scanning the receipts and keeping digital copies, because we all know at the end of the day that KFC receipt, a little bit of grease get on that, you can't see nothing on that 2 weeks, 3 weeks, couple days later. So it's the same thing with the other business receipts, they fade out. So the encouragements at the end of the day, for any of your receipts, scan them and keep a digital copy to make sure that you're able to have your receipts in good condition. And then the final step is to confirm the return summary matches what your sales report is. So let's just look at some real life examples. So the retailer versus the consultant. Scenario, ABC retail store sells shoes and clothing. They charge VAT on every sale at the register. Versus XYZ Consulting, they offer professional advice, so they charge VAT on invoices for the time that they bill at one time. Which do you think is easier to keep a record of? One time. However, it still, at the end of the day, will account for the fact that you still have to make sure keep a record of your sales. So goods are taxed at point of sale, services are taxed based on invoices and payment cycles. Let's look at the next scenario. A business with a high input VAT. So the startup cafe spends $12,000 on equipment and inventory. Input VAT equals $1,200, but they only earn about $8,000 in sales. Their output VAT equals $800. What do you think they're going to have?
What's the question? What do you think they're gonna?
What do you think they're going to have? Are they going to be paying VAT, or at the end of the day, are they going to be claiming a refund? Let me go over it again. They spend $12,000, so their expenditure on equipment and inventory is $12,000. So the VAT rate is 10%, so their VAT input is $1,200. However, their sales is only $8,000. And of course, their VAT equals $800. So let's remember what the VAT formula is. Output minus input equals whether you payable or you credit. So in this instance, their output and their sales is $8,000. They're minusing $12,000. So at the end of the day, what is going to be the difference? A minus $4,000. So their claim would actually be $400 actually as a refund.
Okay. You said the VAT formula is output.
Minus input, yes. That doesn't change just because one number is bigger than the next.
Okay.
That's always the formula. So when the input VAT is bigger than the output VAT, you claim a VAT refund or a credit. Is that clear, or I need to go back? All right. So
Only if you are registered.
only if you're registered. Thank you for that. We got to keep hammering that. Only if you're registered. So a business with low input VAT but high output VAT. So a marketing agency provides services for a few business expenses, and they charge $5,000 per client, but they collect $500 VAT. Their input VAT is low. So say, for example, with a marketing company, the main thing that they may have to pay for is maybe subscriptions and different things. So they're charging a client to do running a marketing campaign, $5,000 to run the marketing campaign, but they're only spending maybe $1,000 on subscriptions and different things. So their output VAT is what? 5,000 minus the 1,000. So at the end of the day, they have a difference of 4,000. So their output at the end of the day would actually be $400. And that's what would have to be filed. So most of the VAT collected goes to the government because their minimal expenses means less reclaimable VAT on their part. Okay, so let's look at this one. A mixed supply business. Healthy Mart sells baby food, zero rated, and cleaning supplies, a standard rate at 10%. They charge VAT only on the taxable items. Now with this, we also have to take into consideration also the fact that now we have two different VAT rates of a 10% and a 5%. So even when you're looking at the receipts, you want to make sure that you're able to see the difference, because when you have to do your VAT filing, as well as when you have to do your VAT output and your input, you need to know which items are 5, 10, or even which items are zero rated so that you can actually account for those items. Okay. So just a reminder, again, a lot of the legal information and stuff that persons are looking for is actually already on our website, inlandrevenue.finance.gov.bs. You can go to the VAT added tab, and there you'll find a lot of information because we have our general guides, our industry specific guides, our VAT Act, the amendments, our regulations and rules, as well as advanced rulings and different things that help guide you with any additional questions. We, of course, can't go through all of the regulations and rules. We'll try to break it down as much as we can. And even as we go throughout this month of VAT, we'll probably be dropping on our socials. So we encourage persons to follow us on DIR Bahamas, little tidbits and little things from different aspects of the amendments as we can share and as we can go. But we encourage persons to go online if you have questions, to ask your questions and to follow us. Now I just want to go over this again one more time. Again, please look at whichever aspect you're paying and make sure you're paying the right bank and the right bank account. For the VAT, the beneficiary is GOB VAT account, which is the Government of the Bahamas VAT account. We have different accounts for real property, a different account for stamp tax. You want to make sure when you're making your payment, you're paying to the correct account. And if you need the information, this information is always available online on our website, where you can always go and just see what the wiring information is to make sure at the end of the day. And we encourage you, keep your receipts at the same time. And of course, along with calling, emailing, we encourage persons to message and communicate through the portal. Because with the portal, you will also get your E&Q or record to show the fact that you did message in the portal, so that it will show any date, any time, so that if we need to follow up, you know when it was that you communicated with us. And that's also proof of your record to say that if something happened, you did send a message to us asking for assistance, asking for an inquiry at the end of the day. Word of mouth at the end of the day, it's not going to work. I had a client come in, said something happened. He don't even remember who the person was he spoke with, but he needed assistance. So the best thing is have your record, have your documentation in our system, which we will follow and communicate back with you with as well. And so, some of our key takeaways for our Module 1. Of course, what is VAT? VAT is a consumption tax applied at each stage of the supply chain. History of VAT: VAT originated in France in the 1950s and is now used globally by over 160 countries, and we initially started in 2015. Our purpose and use of VAT is for funds essential for services like healthcare, education, and infrastructure. VAT, of course, now contributes to over 50% of our tax revenue. Business benefits: registered businesses can reclaim input VAT and receive refunds. VAT in business operations: businesses must understand VAT inclusive versus VAT exclusive pricing, and accurate invoicing and timely filings are mandatory. And of course, we looked at some real life situations. So let's talk a little bit about our next upcoming module. Our Module 2 will be the VAT registration process. With this, we are going to go through the process of how you register if you're doing it for a business, for the first time registering from the business license aspect, as well as just going directly to the portal. We're going to go over some theory aspects of it, who needs to register for VAT, the types of registration, the online registration process on our OTAS system. We're also going to talk about the documents required, common errors to avoid, and then post-registration responsibilities of persons. And then we're going to have a practical where we actually go through the process and show you actually in a live environment how you actually go through the process for both ways, because we want you to understand what you need to do with these aspects. So, thank you for your participation. Any questions? Hold on, my lady.
No, I mean, I just was asking when are we going to get the notes, because I thought it would.
Thank you. So, just a reminder for those persons that are tuning in, the question was about the notes. So all of the notes for each of the sessions and the PDF for each of the sessions will be sent after every module, along with the link for the quiz. And if you haven't registered, we'll also send the registration link, because we want to know which modules you may be interested in. It also includes the schedule to know which days, which modules, and which topics are going to be done on which particular dates, along with the YouTube links for both of the services. Whether you're in person or not, we still send those, because we want you to actually share those out with other persons to actually get this knowledge as we're going through at the end of the day. So after every module is completed, like we completed today's module, you should be receiving those links between today, tomorrow the latest, and you have about 2 days to complete all of the quizzes that are sent. Again, a reminder to persons, if you want the certificate at the end of it, you don't have to do the quizzes, but we ask persons to do it with a 70% rate plus. Then you will be entitled, once you've completed all of the quizzes, to be able to get your certificate at the end. So we thank you for your time. Are there any final questions before we close out?
When is the next session?
The next session will be on Monday. Yes, sir. Same time. All right. Thank you, ladies and gentlemen. Just want to close out the same way we opened. Heavenly Father, I thank you for your grace and mercy. I thank you for the information that was shared. I pray, God, that you cover and bless these persons that were both online and in the room. I pray the information goes forward and is shared throughout this nation, oh God, to illuminate and demystify anything pertaining to VAT, taxes, and everything else that is done. We ask this in Jesus' name we pray. Amen. Have a blessed weekend.
Thank you.